And good afternoon, everyone. This is John Hutchinson with Traders Reserve. I'd like to thank you for taking time out of your day to join us today. We have a very, very special presentation, and I am very excited to have my guest, Adam Mesh, along with me today. I'll be doing the introduction for Adam here in just a couple of minutes. I know everyone is still getting into the room and getting settled, and as many of you who have followed us know, the audio on this program always takes about 30 seconds to catch up to you. That's not a censoring element. We don't take anything out. Don't worry. It's just a wonderful little feature of Google Hangouts. But feel free to grab your lunch or your beverage of choice, depending upon your hour of the day. And we'll be getting started here in about the next 60 seconds. And while I am just setting the table here, this webinar is being recorded. You will receive a link to the recording of this webinar once we have completed it. That will be emailed to you after this webinar is finished. Running time today should be about 60 minutes. We will allot plenty of time for Q&A. Please bring your best questions, and we will make sure you get the best answers. As we get started, though, and as you're all turning up your volume and focusing in on this lovely disclaimer, which we always have to read, and I'll get to that in just a minute, I do want to take a minute to do a quick audio check and video check. Make sure that you can see the screen okay, and also hear my voice okay. So if you would take a moment to, in the right sidebar, you should see a little tab called Chat. If you would just type a yes or a Y in the chat box and let me know that you can hear this audio once the audio delay catches up to you. Once we get rolling, you should be able to keep up just fine. Again, by the time we get down to the Q&A, you may experience that little bit of a delay again, but really should be just fine as we get going. And again, have a very, very special presentation today. I'm very excited to have Adam along today. I've known Adam for a number of years, and you may or may not have heard of him. I will do a brief introduction to Adam as we get going, and he will do a more full introduction of himself as he starts his presentation. So looking forward to having everybody in, and should be in good shape here. Patty, Kathy, glad to have everybody. William, nice to have you here. Thanks, folks. And Bill says, how about 99 out of 99? Keep working on that. I'm sure Adam will be very happy with the day when he has 99 out of 99, as we all would. So if you do have any problems with the webinar as we're going along, audio or video, just a quick note, I do not have a way to technically correct it. The best thing to do is to simply log out and then log right back in. Usually, if you're on a wireless network, you may experience that kind of freeze, if you will. That's usually where that will happen. So if you have a problem, just log out, log right back in. You should be able to catch right back up. And again, webinar is being recorded, and we will have a link and an email out to everyone a little bit later today. So without further ado, it is lunch hour, and we want to get everybody through this as quickly as possible. So let me get started with our standard U.S. government required disclaimer. Forex, futures, stock, and options trading is not appropriate for everyone. There is a substantial risk of loss associated with trading these markets. Losses can and will occur. No system or methodology has ever been developed that can guarantee profits or ensure freedom from losses. No representation or implication is being made that using the strategies or tactics or the information in this website or accompanying material will generate profits or ensure freedom from losses. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading all the time. Also, since the trades may or may not have been executed, the results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. If you are a fan of watching paint dry, grass grow, or water boil, you are welcome to read our entire disclaimer at tradersreserve.com. Excuse me. Now, as I said, I have a special guest today. His name is Adam Mesh. Adam is a 17-year professional trader, so you are in very good hands as we go along today. And over the course of the last 12 months, Adam has developed a strategy specifically around trading weekly options, which I believe, and the reason that I've brought him here to you today, you can use to accelerate the growth of your portfolios, to be able to put cash in your pocket, in your account, every single week. So Adam is going to show you not only examples of trades that they have made which have been successful, but also the thinking and the strategy behind why those trades were made. And make sure you take notes so that you can ask the best possible questions as we go along today. But I would like to turn over now to Adam. Adam, make sure you unmute as we get started. And Adam, the floor is yours. Teach us what you know.
All right. Thank you. Welcome, everyone, to the Ultimate Options Income Strategy. John, thanks for the introduction. I appreciate it. Solid disclaimer. I will say regarding these trades, it makes sense that they say that, liquidity, because sometimes if you have a lot of people putting these trades on, they come within a penny of what we're saying. I will have you know, any trade I'm about to show you is a trade that I personally have made myself. So I'm in these trades with you. I have Todd Bubba Horowitz here with me. I'll introduce him in a second. But based on the way it's set up, he's out of Chicago. I'm in New York. I'm going to be doing most of the speaking, but I love having him on the calls with me. And I'm really just excited to share this strategy with you. The options money machine was something that we didn't look to discover. It kind of Todd told me about it. I'll explain the story, and I just fell in love with it. And it became the number one service that literally, when I think of what I would want my dad to do, what I would want my sister to do, what I would want my best friends to do, this is it. So let me show you what it is, how it works, and I'm excited to tell you. So this is a brand new trading technique that puts cash in your pocket each and every week. It's a strategy so simple a fifth grader can master it. I think maybe a little older, a little more than fifth grader. It's going to show you how you can be profitable 87% of the time, and how this works in any kind of market, up or down. I'm excited to show you that. Okay. Myself, my name is Adam Mesh. As John said, I've been a trader for 17 years. The reason why it says an electronic trader there is because when I started on the computers. And I started day trading, which at the time was a new market. What I'm about to show you is also a new market. It's only been in existence for 3 years, so it's relatively untapped, and when things are relatively untapped, they provide for more opportunity. In 2006, I founded the Adam Mesh Trading Group, and I've been well reviewed. I put some of them up here, so it's been a really good experience. I just want you to feel comfortable with who you're working with. My partner in this is Todd Bubba Horowitz. He's been a member of the Chicago exchanges, there's more than one exchange, for 30 years. He's the founder of Average Joe Options, and you can see him every week on Fox, CNBC, or Bloomberg. Twice in the last month, he's actually come on to Fox Business and hosted the show, which was really cool. Okay? So this is a picture of him. This is like from last month. He was hosting the opening bell on Fox, and it was cool. It's cool to see him as the host. All right. So here's the agenda for today. I'm going to tell you the origin of the options money machine. I'm going to define our strategy. I'm going to talk about what makes the options money machine so exciting. I call it a virtual ATM. I'm going to give you real-life examples of the strategy in action. Talk about how we did when the market dropped 1,000 points in January. I'll explain with February. And then we'll talk about, most importantly, how are we doing right now. And let me just tell you, I could not be more excited to do that. We'll also show you how you can take advantage now, of course, because I'm sure people are going to want to. And we'll do a live Q&A. For the purposes of just me, I get easily distracted, so if someone asks a question, I could go off for 20 minutes. So what I'm going to do is I'm going to do my presentation, and then we will answer the questions at the end, because I'm sure you guys will have some. But I'm going to do my presentation first. Okay? Let's start with the origin of the options money machine. Okay. Okay, and Steph, who I know is listening, I just need a password for JJ's computer if I need to look anything up on that. Someone could come in here and write it down so I could see JJ's computer as well. Thanks. All right, so the options money machine started in 2013. Okay, Todd Horowitz was always an options trader. I was always a stock trader. He always wanted to get me to do options. I never wanted to do it because I made my living in stocks. And that actually comes in handy with what we're doing here. So I made my living in stocks, but finally, after all those years, Todd said to me, Adam, there's this one strategy that you have to try. It's weekly options, selling puts. It's perfect for what you do. He's like, you're so good at identifying good levels of entry that this lines up perfectly. He said that it was a strategy that Carl Icahn, I'm sure many of you, yes, have heard of Carl Icahn. He was using it in the famous Herbalife play. It's now a famous Herbalife play. The first thing he did to initiate his position was sell puts. Okay? That was the first thing he did, was sell puts. And then he used that money to buy calls. So it's a strategy that guys like Carl Icahn are using, and George Soros, all the big boys use this strategy, and you're going to see why, because it's special, okay? So it was supposed to be 17 trades. That's what I told Todd. I said, I'm going to do 17 trades, and we'll see how it goes. Why 17? Because it's just one of my lucky things. It was in my head. I said, that's what popped out. So it turned out that we did 17 100% winners in a row, and that's how the options money machine was born. The first 17 trades I made using this system were all 100% winners. So let me explain to you guys what I did. What is the options money machine? Okay. We take advantage of the weekly options market. It began 3 years ago. It says 2 here. It's 3 now. But it's just now attracting major attention. And I said this is what Tier 1 hedge funds and activist investors like Carl Icahn and George Soros do. More importantly, this income strategy is averaging $200 to $300 per week with an 89% annualized return. Okay? We're selling weekly puts. Okay? Out of the money weekly puts. But what I'm going to do is show you not just how we do it, but the why behind it, because the levels are really important. Okay? What makes this strategy so exciting, and we call it a virtual ATM, is 3 things. Okay? And I love this little picture of an ATM. That's really what it feels like with this strategy. So the first is to get disciplined. Okay? As a trader, I found that and as someone who coaches thousands of traders, I found that there's 2 types of traders. The people that have trouble getting involved, and then there's the people that overtrade. My personality and Todd's personality fall into that latter group of people that might overtrade. They might get a little emotional. They might do too many things. But there is a big group of people that have trouble making any trades. What I love about the OMM is because it's a weekly option, so you're selling the weekly puts, the trade's over in a week. So you put the trade on, and then you don't do anything else, and then a week later, the trade is over. So that's what allows you to get disciplined. Okay? You're putting on a trade, so if you're someone who has trouble doing that, you're on this webinar with us, you're seeing the trade, and you do it. It's just like if you didn't want to go to the gym, but you had a trainer, you would show up. Here you show up, you put on the trade, so it encourages you to make the trades. But it also, because it's weekly, prevents overtrading. How many of you have ever gotten in a position and it went against you and you bought more and you got a little bit out of control? Or you looked at your screen and you're like, how did I end up trading 9 stocks at once? Because this is so specific, and again, it's weekly, that it's very, very disciplined. It prevents overtrading, but it also encourages you to make these trades. Similarly, and obviously related, is it gets you organized. Because these trades go on each week, they also go off the following week. So you're always clearing off your screen. And think of it as a messy desk versus a clean desk. When you clear off your whole desk and you clean house, how good does that feel? Well, it's the same thing with your trading screen. When you see all your trades clear out, you have the ability to take a deep breath and start fresh. Earlier this year, I made a boneheaded move, and I shorted way too many of GameStop, and it went against me, and I took a big hit. Okay, I lost over $20,000 in GameStop, and Todd, one of the only people in the world that really gives me advice, said to me, do what you do best, clear out your screen, and just get back to the basics. And that's what I did. I took everything off, and when I got organized, I was able to focus and make all that money back. And really, the main way I made it back, because I wanted to be disciplined, was using this strategy, just selling the weekly puts. It's not the home run type experience that you would expect. You're not making millions of dollars doing this, but you get paid every week, and you'd be surprised to see how fast that can add up for you. Okay? There's very few deals in this world, in life, where you do the deal and the first thing that happens is you get paid. With the options money machine, when you sell that put, that's exactly what happens. The very first thing that happens when you sell the put is you get paid. So let me explain the very first trade I made in options money machine, because there's so many things about it that represent why we're doing this. Okay? So imagine if you could go back in time and take advantage of missed trades. And you see how I have this picture of a time machine here? That's exactly what happened. How many of you have ever been in a stock and it went up, and instead of being happy that it went up, you thought to yourself what I've thought to myself so many times: I should have bought more, right? How many of you have said, I should have bought more? How many of you liked the stock at a certain price, meant to buy it but never did, and then saw it went up without you and said, oh man, I knew that was going to go up? If you've been involved in the markets, that's happened to you. Either you bought a little stock and you wish you bought more, or you didn't buy any and it went up without you. Well, imagine if you could go back in time and correct that mistake. With the options money machine, that's the closest thing you could do to having an actual time machine. So the very first example was Starbucks. Starbucks was a stock, and I'll bring it up on the screen in a little bit. Starbucks was a stock that I loved at 70, but I only bought a little bit. So when Todd came to me and told me he wanted to try selling the weekly puts, Starbucks had moved to 72. And I was frustrated. I was like, oh, I knew it was a buy at 70. I should have bought more. I'm making money, but I wish I bought more. So what I went and did was I sold a weekly put in Starbucks. I sold the put at the 70 level, okay? So Starbucks was trading at 72, and I sold the 70 put, which meant that all Starbucks had to do was stay above 70 for the week, and I got paid 67 cents on 3 contracts. So 67 cents times 3 contracts, which equals 300 shares, would be $201 I made for the week. All right? My break even would be 70 minus 67 cents, which is 69.33. So as long as Starbucks stayed above 70 for the week, I got paid $200. As long as it stayed above 69.33, I made money. And if it went below 69.33, you know what? I was willing to take ownership because I loved it at 70 anyhow. That's how it becomes a virtual time machine. So let me show you what this looks like. This was the Starbucks trade. All right? We loved it at 70. Okay? It went up to 72.50, not even 72, 72.50. So it was a $2.50 head start. Okay? Now, look at the support at the 70 level. That's what price we're selling off of. For the week, we're selling with a $2.50 cushion, plus we're getting 67 cents for selling the put. So we have a gigantic head start. Now, what happened? Starbucks went to 75. So I still have the original stock I own, but I felt less bad about not buying more at 70 because I got paid $200 for the week just for selling that put. Okay? This was the first main trade that we did, and this is what we've built on since then. So what I want to do is I want to take you through some other trades and show you the various reasons why we'll sell a put in a stock, and even give you an example of a bad trade so you can see, okay, what happens when it doesn't go our way. All right? So SLW was a stock that had major support at 20. If you look at that first green line, you'll see that for months, to December, January, February, it wouldn't go below 20. So it finally started to go above 20, and it went to 22. We sold a put at, I think it was 21 was where we sold the put, or 21.50. And it ended up that we took ownership of the stock. Okay, so it was trading at 22. It dipped a little bit. Our risk was like 1 point in the stock. We ended up taking ownership, and once we did, because we did it around such strong support, the stock went up to 25. Okay? So we made on 4 contracts $1,000 in this trade by selling the 21.50 put. We sold the 21.50 put while it was trading at 22. We took ownership, and then it surged 4 points. Same thing with LNG. Look at that support. October, November, December, it would not go below 40. So finally it goes below 40, comes back, tests it. We're watching the support, and we get involved when it's at 44. We sell a put at 42. 2-point head start. It comes back down, does a little dip like it had in the past. We take ownership, and the stock went to 46.90. That's where we sold it. Again, we made over $1,000 in trade. Now, if you look at LNG now, you'll see that the other benefit of the service, when you have a group of guys like Todd and I who are identifying good trades, they also lead to good stocks. So LNG, which was at 46, went up into the 70s or 80s. And Starbucks went up into the 80s. And you'll see many of these stocks that we get involved with have really performed well. So not only are we showing you how to make weekly income, we're also identifying great stocks for you to trade. Okay? So the thing about this is there's 2 ways you can do these trades. You could sell the weekly put naked, which means you're willing to take ownership, and that's why we only recommend 3 contracts. That's 300 shares. For that, here's what's important to remember. You have to be willing to stock. Now, any one of these trades that I'm making, I am willing to own the stock because I'm selling a put at a level that I love. Okay? I want to own these stocks. I'm either collecting a premium or I'm getting the deal at the exact price that I want it. Sounds pretty good? Well, it has been this whole year. So that's option 1. And for that, I recommend in a trading account that you have at least $15,000 to $25,000 to trade with, because you have to have enough money in there to be willing to take ownership. Now, are you excluded from this if you don't have that much money in the account? Let's say you have $2,500 or $5,000. And you wanted to do this, can you still be involved? The answer is emphatically yes. The way you do that is through spreads. I'm working with someone right now who tried it both ways, and he said when he sold the puts, it tied up $25,000 in buying power. When he put on the spreads, it only tied up $250 in buying power, $300 in buying power. So it doesn't tie up the buying power. It prevents you from taking ownership. I prefer the naked. Todd prefers the spread, but both of these work. Okay, so you're not eliminated if you don't have the buying power. There's a way to do this where you don't take the chance that you own the stock. The only thing that you miss then is you have every opportunity to collect premium each week, but at a certain price you can't own the stock because you'll be out of the trade. Some people prefer that protection. If there's any questions on those 2, I'll obviously answer it at the end, but I know people are thinking about that early on, so I just wanted to address it. Here's another trade, Walgreens. Look at the support in this stock, December through January. It was staying around the 55, 56 level. We sold a put. It shot up. Just easy money. Okay? The key thing is the why behind this trade. Look at that first green line horizontally. That support is where we're selling a put based off of. And as you can see, the stock after that went from there, it went up 10 points. So not only are we just selling the puts, the secret sauce is that we're selling them at really, really good levels. Altria, now here's another thing I love about this. So Altria is a stock that you could identify a level and say, all right, I know this isn't going down, but how much is this stock going to go up, right? I mean, Altria is not Netflix or Tesla or Solar City. It's Altria. It doesn't move that much. But if you could identify a stock that won't move that much, that's perfect within the options money machine system. So look what happened. February to March, it stayed right around the 35 level, so we just kept selling the 35 puts on a weekly basis, getting paid. Then it moved up to 36.50. We continued to do the same thing. We took advantage of inactivity, and we've gotten actually very, very good at that. I'll show you some more examples. Microsoft is another one. It was stuck in the low 30s, and then it moved up into the mid 30s. We traded it 6 times, collecting 100% premium every time. We eventually took one loss on Microsoft. We missed staying in by 10 cents. We got stopped out. But since then, we've traded it again successfully since. And as you know, Microsoft is now above 45. eBay. So here's another example of profiting from something doing nothing. Again, bringing up my guy, Carl Icahn, the activist investor. What was he lobbying for in eBay? Who knows? He was lobbying for eBay to spin off PayPal. So typically what you'll see when there's a major event that could happen being discussed, activist investor looking for change, the stock will actually kind of get stuck in limbo as it waits to see what the resolution is. And that's what happened in eBay. Although it looks like a lot of squiggly lines, you could see this stock only stayed in a 2-point range. So we traded eBay during that time where it was kind of stuck like a deer in headlights 7 times, all 100% winners, and we completely profited from eBay doing nothing. Okay? Verizon. We haven't been involved in this lately, but early on in the service, we continued to profit from it doing nothing. If you look at the beginning of this year, January and February, it was in a 1-point range for 2 months. So we continued selling the puts and, again, collecting profit every week. I just want to give you an idea of the kind of trades we're making. It's not Apple or Tesla or Netflix. Those are too risky to sell the puts in, and you're not going to get the reward you want. You're better off owning the stock. With stocks like this, though, it's an income system where you're selling puts on stocks with low PEs or relatively low, in the case of Starbucks, that are stable, consistent companies that either you get your weekly income from selling the put, or you end up owning a stock for a short period of time that also pays you a nice dividend. So in January, just kind of ruined the surprise a little bit, but in January, the market dropped 1,000 points. 1,000 points. So if we're selling weekly puts, out of the money puts, which means we're willing to take ownership of the stock, so essentially it's a bullish strategy, what's going to happen when the market drops? Technically, the strategy shouldn't do well. Todd warned me of this, and we made some modifications, and look how we did in January. The market dropped 1,000 points. January of this year, 2014, we had our best month ever at the time. Now, why did that happen? Because when the market drops, where does the money go? It goes into the safer name stocks. What were we selling puts in? We were selling puts in the safer name stocks. Like, that's not luck. That's Todd and I recognizing we were in a weak environment, so we sold stocks that we thought money would come into or wouldn't move that much. And also, you have to remember, they're weekly options. You have a lot more exposure. If you're selling monthly options or yearly options and the climate changes, you could get crushed. But if you're selling the weekly options, there's not going to be that much that happens in a week. So even though the market goes down, what you must remember is we have a huge head start in these stocks. We're selling these puts out of the money. So if Walgreens is trading at 67, we're selling the 65 put, so it could go down $1.50 when the market drops 1,000 points. It could go down $1.99, and we're still going to collect 100% premium. So look at the names on this best month: Silver Wheaton, Walgreens, Verizon, KB Homes, eBay, Microsoft, and Cheniere Energy. These were stocks that we wanted to own, and in fact, the two we did, SLW and LNG, were the ones we had the biggest home runs in because they went up when the market went down. Okay? How do we follow up January? With February perfection. In the month of February this year, every single trade we made was a 100% winner. So you guys, what I'm telling you is that's how this is supposed to work. Over 80% of the time, they're supposed to expire worthless, and when you take ownership, we're looking for them to move for us. Okay? But there are times when you could take a loss, and I'll show you that too. Here's a bad trade. We were in GPS, which is Gap. We sold the 40, which was a great price. I like the level. We collected 26 cents when we sold this. So on 26 cents for 3 contracts, the first thing we did was we collected $78. We ended up owning Gap. Our break-even was $39.74. We took ownership. So then what we do is we put out a stop loss. And we issue that a loss via text alert, email alert, or we have an OMM app that you get access to. So there's 3 different ways you know, okay, here is our stop loss. Whether it's in your email, on your phone, on your app, like, okay, 39.40 stop. It hit 39.40. Our break-even price was 39.74, so we lost 34 cents on 3 contracts. So we had a loss of $102. That's what a loss looks like. Okay, so that can happen. It happens under 15% of the time, but I want you to know it's not like you're owning Apple that could drop 15 points. You're owning the Gap stores, and we're going to put in a stop because we don't like a lot of risk. This ended up going back into the 40s, so we should have held it, but we were conservative. We took a quick loss, and we moved on to the next trade. What about right now? As you guys know, in August of this year, we just started September. In August of this year, what happened at the beginning of August? We had the market drop 800 points, right? And what people really appreciated was that we got a little bit more proactive. We actually moved the dates on one of the calls because there was a day where we said we're not going to put on any trades. The market looks like it's going down further. There's no support. I think of this as if I'm advising my family and friends, and what I would tell them is don't trade. And so we sat out for a week, and then we did a call on a different day, and it was extra work, but obviously we care, and we were reading the signs, and at the end of the day, this is how we did for August. Perfect. That losing trade in July was the last losing trade we had. Okay? In August, these were all the puts that we sold, and we collected 100% premium on every one. One of the names you're going to see on there 4 different times is Yahoo. Why were we selling the puts in Yahoo? Alibaba. Alibaba IPO was imminent, coming within the next month. Yahoo's very invested in Alibaba. What happens when you have a big event? You have deer in headlights and activity. We expected that Yahoo had a lot of upside. We started selling puts at 33. Yahoo now went to 40. We collected income on this 4 different times. Every week we were selling Yahoo for beautiful 100% winners that you didn't think about. And by the way, September, I don't have it in the slideshow. So far we made 3 or 4 trades in September, whatever the number of trades was. Again, all 100% winners. So I don't want to jinx anything by talking about that anymore, but literally we've been in a really good rhythm. That's why I was excited to do this presentation today, because I could show you that there's many months where we literally don't have a losing trade. And the last, whatever many this is, 6, 7, 8, 9, 10, 11, 12, 13, 14, the last 18 to 20 trades we made in a row have all been 100% winners. So we're doing really well. I am going to give you the opportunity to ask questions, but first I want to give you the opportunity to participate in this service. Okay? Here's what we're offering for the Options Money Machine to you guys today on this special event. the weekly option picks. So every week we're going to identify the optimal trades to upgrade your portfolio with. Now remember, because this is important, it's the why behind these trades and the stocks we're picking that separates us. Not many people could have every trade be perfect in August. It was a tough month, so stock selection is critical, and that's why these weekly option picks are so important. Portfolio management. We will manage every position we enter together, catering to all account sizes. So if ever there's a time where we take ownership of stocks, Todd and I are up Monday morning, and we're seeing here's what's going on, and we're discussing it before the market opens, and if anything needs an alert, we're always sending alerts, keeping you informed. We will manage each position start to finish. You're never going to own a stock and be like, all right, what do I do with this? Okay? All right. Market analysis. We will explain the why behind every trade so that you understand the strategy being employed. Okay? Now this is really important. When we're talking about this, we have Todd Horowitz with us. He's the person that the networks turn to understand why behind every trade. And I have him with me each week. I feel so lucky. And so we won't just say, sell A&F, sell Lulu. We'll say, here's why we're selling the retailers this week. Look at the level. Look at the price. Look at why we're willing to take ownership. Because what we found is that we've had services that have performed really well in the past. Nothing as good as this, but services that have performed really well. And retention was always hovering around 50%, and I didn't understand why. So I went to this financial roundtable with all the big people in the industry, and I raised my hand and I said, if I perform well, why won't we have a higher retention rate? And they said that people don't just want the good performance, they want to understand why they're making these trades, win or lose. So that's what the webinar was for. That's why we do it every Thursday at 11:30 Eastern. And obviously it's recorded if you can't make it, and the picks are sent out right away. But we explain why we're making the trades, and we pick them with you on the call so you learn as we go. And we're also offering today special group training. This has never been offered before. By signing up now, you get access to bonus with me and Todd. It says it's limited to 125 people. That's a mistake. It's actually limited to 25 people, not 125. I am sorry. I wish we could make 125 available, but the reason why we're limiting it to the first 25 people today is simply because of our customer service. We're very hands-on. We've found that people have questions they need answered, and we'd rather get it right and create an experience and a relationship that will last for years, overwhelm ourselves with too many people and not enough time to answer questions. So we keep it small so we could keep the relationship thriving. Okay? To be one of those 25 people, we put together an awesome package for you. I think it's an amazing deal. You can go to meshelite.com/Traders Reserve right now. I would try to chat this out, but I don't even know. I'm not even sure. I've never used this.
Adam, I'll take care of getting it out with a sticky message in the chat box. And for everyone else, there's also a pop-in button so you can immediately reserve your seat in the options money machine with the special offer that Adam has put together for you today. So if you just look to the right of your screen there, there's a little button that says pop-ins, and that will take you directly to the registration page so that you can get started reserving your space immediately so that you can be one of those 25 people in his special training program. Okay, Adam, I'll shut up now. It's all you.
No, thanks, Sean. I appreciate that. Because I never used it before, so that's great. So I just wanted to go. I have the page up on another computer. That's what I asked for before. So what they did was for 2 years, they created a price point of $1,297 for 2 years. So let me break that down for you. $1,297 divided by 24 is $54 a month. Divided that by 4 again, it's $13.51 per week for a system that is averaging $200 to $300 per week. Okay, so really good bang for your buck. It's the best price. almost everyone who joins this stays with this because they love the rate. It's like even if you don't use it every week, you're psyched. I found the most popular price is actually the one below, though. You get 20% off today. Normally $9.95. I guess people feel more comfortable with going, on a year-to-year basis. It's $795. If you divide that by 12, 66 divided by 4, comes out to $16.56 a week. Again, averaging $200 to $300 a week. Also, if you are not happy, right? If you are not happy within the first 30 days, okay, simply let us know, and we will give you for the $12.97. We will give you, we used to say we'll give you $1,097 back, but I realize it should just be the same for both. All we'll keep for either one is $100. So if it's $12.97, you'll get $11.97 back. If it's $7.95, you'll get $6.95 back. The reason why we keep $100 is really because what I said, the customer service. We have people answering questions for you all the time. When you call in, there's real people that answer the phones. It's a really good experience, and we would not be able to provide that if we didn't spend so much on having customer service available. So if you end up asking a lot of questions for a month and leaving, yeah, we'll keep $100, but most people, like I said, don't leave. Oh, I forgot the end of that story. So with this service, I told you industry standards around 50% retention rate on subscriptions. This service is getting closer and closer to 80%. It's above 70%, moving toward the 80% retention mark, which is unheard of in the space. And that means we're providing a really good experience. So for either of these options, there are only 25 total spots available. So if there's 10, $12.97, and 15, $7.95, whenever those fill up, they're going to be gone. As soon as you buy this and this call ends, you'll have instant access to a 2-hour video webinar that Todd and I did that explains deeper how to use the service. And you'll also have access tomorrow to our call at 11:30, where we'll be putting on 3 or 4 new trades. We'll update the current trades. We'll put on 3 or 4 new trades. And that's it. Once you join, you're in it. It's once a week. You're meeting us. You're good to go. You're in for the experience. Okay? For anyone trying to take advantage of that, I'm going to, as John said, I'll shut up for a minute and let you go there to make sure you take advantage of those spots. And then after that, in 1 minute, I'm just going to start answering some live questions for you, but I'm going to leave this link up for right now.
By the way, Adam, just to let you know, in a private chat message, Chris stopped by and said, signed up and didn't realize this webinar was for OMM. Already in OMM, and it has been great so far. And he wanted to stop by and say thanks for all the help to you and to Todd. And we'll start rolling through a few of the questions. We have a couple of good ones here. I'll feed them out to you and to Todd, and the two of you can take them as we go. But one of the questions was from Charles, who asks, a very good one. He says, I've always been warned about selling naked puts. Please explain how safe selling weekly puts can be.
Awesome. And I see Charles joined already, so thanks for that, Charles. Appreciate the confidence. That was a quick turnover. So if you were selling naked puts in Tesla and you had someone like Elon Musk come out, which he did, and say that his own company, he thought the stock price was too high and it drops 4% overnight, that would not be a very fun naked put selling experience. That's why we go more for the income model, okay? And by doing it for the income model, what we're doing is we're targeting stocks with PEs that are closer to 20 to 1, 12 to 1, like in Wells Fargo's case. Companies that are very conservative. So as an example, we sold a put in JP Morgan, and they ended up, the government announced some extra lawsuit or something that was worth billions of dollars, like the scariest news you could possibly hear, but it's JP Morgan, so it moved like a point. And remember, we're selling out of the money puts, so at the end of the day, I think we either broke even or lost 10 cents on it. So the reason why naked puts would be scary, if you go out further, if there's a dramatic shift in the market environment and you've sold puts that go out 3 months, yeah, there's a lot of risk. In the weeklies, out of the money puts, yeah, there could be some risk if you're trading on Netflix or Tesla, but the stocks we're trading, and that's why I made such a point to show you so many examples, much less risk. Okay, now, could something crazy happen? Yeah, Walgreens at one point when they announced that they were not going to do the inversion and move overseas, dropped like 5-6 points and eventually went down 10 points. And Walgreens is a stock we've traded in the past, but also that's where stock selection is important. When Walgreens had done the inversion, when Walgreens did the inversion, the value went up. We had stopped selling it because it was no longer a good put for us to sell. We no longer felt comfortable because of the way it was trading. In the over a year plus that I've been doing this, the only time I kind of wiped my hand across my head and said, "Wow, that would have been bad," was when I saw Walgreens, which is a stock we have traded, go down. And that was one time, and we had sold 3 contracts, but we were out of that for a win before that. We've traded that for a win. One time I think I took the trade off, it was a loss, so I don't remember which time that was, but Walgreens is the stock that overall we made great money in this year.
Adam, could I add one thing?
Yeah, absolutely, Todd.
Hello, everybody.
Hey, Todd, I didn't know if I could make it work when you speak, so that's awesome. What's up? I was so scared to introduce you and have you not say anything. What's up?
It's a ventriloquist now. You're doing an act. Anyways, the reason we sell naked puts, we're selling naked puts in stocks that we want to own anyway. So if you bought the stock, you would be taking the same risk to the downside. But what we're trying to do is either collect the premium and put the money in our pocket and turn it into an income strategy, or take ownership at a stock at a level that we want to own. So the risk is not there because, again, as Adam stated, we are working on stocks that we would want to own in our long-term portfolios, our IRAs, our Roths. You know, especially when you're looking to turn income, you're not looking to take higher risk. I don't want to be involved in the Teslas and the Netflix and those type of stocks. So all these are stocks that you're willing to take ownership on that you would consider buying. So the first move you always make if you want to buy a stock is you sell a put first. And if it keeps working, you keep taking the yield, because over a year's time, the yield on the selling the put will be much bigger than the profit you'll ever make on the stock if it's going in your direction.
Thanks, Todd. And Charles, hopefully you're comfortable with that answer. We have...
Adam, a couple of quick ones that I want to interrupt on here. Bob is trying to buy and asks, is PayPal an option? The offer indicates it, but the order completion doesn't allow PayPal. Do you have a phone number someone can call if they're having a problem ordering?
Yes. Tell him, if you could chat it out, tell him to email Stephanie at adammesh.com, STEPHANIE at adammesh.com, with his number, and she can call him right now.
I will post that for everybody. If anyone's having a hard time ordering, please email Stephanie at adammesh.com. You need to make sure that you let them know that you were on the Traders Reserve webinar so that you can be one of those 25 people to claim your seat in the special training that Adam is offering. So make sure when you email Stephanie that you let her know you were on this webinar and she can take care of you rapidly. Carolyn, a quick note, I sent back a private email, private chat to you per your question. I need your last name so that I can pass that on to them and have them get in touch with you to answer your question regarding joining. Adam, a couple of quick questions here, a couple of easy ones. Well, I think they're easy, but you may find them hard. Let me scroll back down to, I think it was Mark. Mark Marino asked, what about selling calls in a down market?
We get asked that all the time, Mark, and there's a longer explanation why we won't do it. First of all, it's not our strategy, it's not the game plan. If you started a hedge fund and you had everyone invest in the hedge fund based on your strategy, and if it was a long short strategy, you couldn't start doing futures or something different based on that. And with this, we kind of give the outline at the beginning. This is what we're going to be doing. And we've shown that even when the market goes down, we can make money because of the way we're doing it. And it's been so successful that we don't want to change anything. I'm one of those people, and so is Todd, that we're not afraid to try and reinvent ourselves if need be. I've had other services where I didn't love the way it was performing, and we tinkered with, what we were doing to try to get a successful resolution. With this one, people have been so happy. It literally is my favorite thing to do, so why change it? And if you get into the selling calls too, then you're trying to predict the market. And I got to tell you, and how many people will agree with me on this, there were many, many weeks this year where we sold puts where we didn't think we were going to get crushed, but the market didn't look great. We just identified a couple of individual plays, but the market ended up surprising us and going up hundreds of points in the week anyhow. If you try to sell calls and puts, then what you're trying to do is predict the market. And kudos to anyone who's predicted the market this year, because I think it's been real tough. So what we did was just put our heads down, focused on individual stocks, and created an amazing experience.
Let me just add one thing to that as well. When you're selling calls, you are opening yourself up to open-ended risk, because if you sell a put, you know exactly what your exposure is, and it's the stock that you're willing to buy. But when you sell a call, if you think about it in theory, there's unlimited risk, because a stock can go from 50 to 200 overnight. It doesn't happen often, but it does happen. And you might not have wanted to have been short that stock, but you were trying to steal the money, as they say. You want to be in. This strategy is based upon stocks that you want to own, that you want to be in, that you're not afraid of, that we define super levels for, that trade over a weekly basis. We're not looking to turn this into an active trading service. All we are trying to do is help people generate income on a regular weekly basis that allows them the opportunity to put bits of money in their pocket every week, and as they make more money, they get to trade bigger size, and then they get to make more money on that as they do that, what we call the organic growth formula.
Okay, and there obviously are still spots left. We had a couple people sign up, like 3 people sign up right away, and then it's tinkering, but definitely take advantage of those spots now we're on the call. Or, and I always say this, and Todd always say this, we still have time left. Any buying question you have, ask me now on this call to help you make a decision. You know, if you're like borderline thinking about it, ask us, you know, because I'd rather help you come to a decision either way by providing a clear and quick answer. Because as I said, I love the service. So, do we have more questions now?
Yeah, we do. We have John asks, how much capital am I going to need to do this?
Okay, so I addressed it a little earlier, but always something that comes up, and great question. So there's 2 ways that we do it. On every call, we provide the naked version and the spread version. It sounds funny, but I say I'm the naked guy and Todd's the spreader. But that's what it is. I do the naked trades, Todd does the spread trades, and for the nakeds, you need more money. And it's going to depend on the price of the stocks we're trading. I'd say minimum 15,000, 4-to-1 margin is 60,000 intraday, 30,000 overnight, up to 50,000 in an account. If you're doing the spreads, it's $2,500. Would you say, Todd, is good?
Yeah, I mean, a spread trade, for what we do, you need $900 in your account every week to make the spread trades. That's what they cost. We do 3 contracts. It's $900, times 3. So yeah, $2,500 is fine. You're not overly exposed, and you can use it on a regular basis. So you don't have to have the real big money to get involved in this. That's why we devise both parts, so that everybody who wants to be in this side of the business and selling insurance premiums and collecting the money gets the opportunity to play.
And what's the thing, Todd, because I know we're going to get this question anyhow, with IRAs? What's the question we always get about IRAs?
You can do both sides in the IRA. In the IRA, the only difference in the IRA is that you have no overnight margin on the naked portion of the trade. So if you're going to do a trade, you have to have enough cash, not securities. You have to have enough cash to trade the nakeds in an IRA, but you can do the spreads in an IRA.
And me personally, if you're asking me if you have $900, if you should get involved, $900 is the minimum. I always like to have a little room for error. You never want to feel like your back's against the wall when you first start trading. So I feel comfortable saying $2,500, so that if you had a loss or something and you lost $50, it doesn't affect your trading and you don't have to lower your positions or anything. I hope you guys hear it as much as I do in Todd's voice. He's like the man when it comes to this stuff. And, he talks a lot more on the weekly call. And it's just great to have him there and ask questions, and people love it. What's the next question?
I actually have a very good question here from Bob, and this probably should be answered by Todd to help everyone, but feel free, Adam, if you want to field this one. It's which provides better risk-return ratio, naked or spreads?
So I can answer that too, and Todd, if you want to add on, it's fine. So if you do the naked trade, you end up owning the stock, you have all the upside. If you do the spread trade, your downside's protected, but your upside's limited. Now, if there is a range where you could end up owning the stock if you want to on the spread trade, always your choice. We tell you if you don't want to own it, take it off here. But you're going to get a little more premium doing the naked trades, usually, based on how we do it, the majority of the time. And also you have the upside of if you get optioned the stock, if you get assigned the stock, you get all the upside on the naked side. Some people like the protection of not being able to own it on the downside. I like the upside potential. Todd, anything you want to add? Or?
Well, yeah, I mean, if you're just talking about pure percentage on dollars, the spreads pay a higher percentage per dollars. But if you have the capital to do the naked, you'll make more money on your dollars. It's really a fine point. I like the spreads because I can do more and I don't tie up my other trading capital by doing naked. So it really comes down to a question of where you are with your portfolio and how active you are trading the regular market. So either way works extremely well. Again, if you're just talking about return on dollars laid out, there's a bigger return on the spreads. But if you're talking about overall dollars, you're going to make more on the outrights. It just depends on your personal preference and where you stand and how much money that you are actually trading with when you're doing the system. But either way works equally well. Again, it comes down just to really a personal decision if you have the money.
And remember, folks, when you're selling a put, you are not spending your capital. You are using your capital to back that put in the event that you are, in fact, put the stock. The spread trade is more valuable to those people who want to, as Todd said, either take more trades or have less capital to begin trading this strategy. Just a couple more, and then we should be able to wrap up here by the top of the hour. Again, remember that a replay will be emailed out to everybody here. Should be out as soon as we wrap up the webinar this afternoon, and you should still have a few spots open in that special training class. But a number of questions that were asked really about the spreads. So Todd, if you could just give a quick example of how a spread trade works and what kinds of expectations people should have in terms of profiting from spread trades.
When we do a spread, we would take, for example, let's use Microsoft, and today Microsoft is trading right now at $46, I think. Okay, so if Microsoft is trading at 46, what we would do is we would probably sell like the 46 or 45.50 put, creating a credit, and what we would do is we would go below that and go down to either the 45 or the 44.50 put, which creates a debit. But net for the trade, we're going to make a collection. And what we've done is we now want the stock to stay above the level it's trading now, 46. And as time goes on, we collect that money and it goes into our account because we collect the money immediately. And that money goes into our account right away. And all we're doing now is securing our holding on this money. Now, if something should go crazy and Microsoft would go down, let's say tomorrow it went down $3, which is not likely, but it could happen, then we would just be in it, short at 46, long at 46, and back out at 45, just realizing a small loss. But we're creating a net credit, the same as selling the naked put, but what we're doing is we're buying a little bit of protection underneath while still creating a net credit and collecting that money into our account.
And just real quick, guys, and I guess we'll take a couple more questions to be done. The meshelite.com/traders reserve, that gets you the opportunity to try this. If you go to the page, it's either $12.97 for 2 years, $7.95 for a year. But my challenge is do it for at least a month. If you're not happy in the first 30 days, you get everything back except for $100 for either one. But the cool thing is almost 80% of the people have been happy for an entire year. For anyone that joined in August, their service was paid for in August by the picks. Literally paid for that, so it's 11 months free. And we're feeling good right now, so we welcome you aboard and we look forward to creating relationships. What I like about this is it's usually less people that join, but people that we're going to get to know and work with for years and hopefully meet at live events in Las Vegas and stuff like that. If you're really tempted, but just don't like the big upfront and you want to commit to the monthly, it's not as good of a deal that you can tell. I shouldn't be on it for the selling part. It's not as good a deal, but for people that want to try it monthly, we always get 3 or 4 people that feel more comfortable with that. There's the link for the monthly option. You go to meshmonthly.com/traders reserve. And what you'll see is for quarterly pricing we have, it's $349 for 3 months, or $127 a month, which is still works out to divided by 4. Wait, 127 divided by 4 still works out to $31 a week for services making $200 to $300 a week. Plus, in terms of size, we always recommend anywhere from 2 to 4 contracts. But if you're comfortable, you could always use this bigger and make more money. That I use it usually from sometimes the same shares, a lot of times for more. John, we're going to do a couple more questions and be done. Is that good?
Should be. I'm also posting that monthly offer in the admin box and in the chat now, so you should be able to get, for those of you who want to at least get more of a trial effort, you can take that link there. And I'm looking through to see if we have any major questions or important questions, I guess you could say, and I don't see a whole lot here. We'll finish up with this one because this is gives a good example of how you and Todd work together to think about the market and give the rationale behind the trades that you do propose or that you do make. Question was, with more and more people switching over to options, how or would this affect stocks?
This has no effect on stocks. It's what's happening is there's always going to be plenty of stock traded, and what really goes on for professional traders is they're using options against stocks all the time. There's a lot of advanced strategies that true market makers and true funds use using the options. So all that's going to happen with these weekly options is they're going to become better and more liquid for us and actually open up more windows for us to be able to trade and create many, many more opportunities as it grows, which is why if you look at a business, you say, I've got the ground floor opportunity for you. This is a ground floor opportunity to learn how to do this, execute this system in a market that not many people understand yet, and fortunately we do.
Yeah, so, and also the nice thing is the volume's actually growing. Remember, this is still, in my mind, the baby market. It's only 3 years old, so we're able to take advantage for a while. We're going to leave this link up, themeshelite.com/traders reserve. I encourage you guys to check it out and give it a month's shot. I think you'll end up being with us for years to come. If you have those questions or you want to go through PayPal, again, you can email Stephanie@adammesh.com. That's STEPHANIE @adammesh.com. And make sure you tell us, obviously, you came from Traders Reserve, so we're able to give you that bonus experience.
And a special little feature, too, folks, if you happen to be going back to watch this webinar, the replay, there's also a Q&A box available with the replay, which will send questions to us, which we can send right on to Adam and his team. So if you haven't made up your mind yet, you should quickly. But if you have to watch the replay, in order to be a little more secure about the decision that you're making here, you can send your questions in to us through the replay question box, and we'll make sure that they work their way back to Adam and his team to get back to you quickly so that you can get started with him this Thursday. Remember, they make their recommendations on Thursday night. It's Wednesday, so if you get in today, you could have your very first recommendations tomorrow night, which means you could have your very first weekly paycheck a week from Friday. So get yourself in either on the monthly or on the annual plan as Adam has made those offers available to you now. If you need the links, just drop a quick question in the email in the chat box, and we'll make sure that they get out to you. We'll be wrapping up the webinar here in the next 30 seconds. I want to thank Todd and Adam for joining us and providing a tremendous webinar. I think this is the next big thing for investors. We know it because we do it, which is one of the reasons why I wanted to bring Adam to you, because he and Todd do something that is different, something that is unique, and something that is very powerful. So get yourselves in, even if you try it for a month, prove to yourself that you can do this for yourself and put that cash in your pocket every single week. Remember, they'll be making their first recommendations for you tomorrow night, and you could have your very first weekly paycheck by next Friday. So for Adam Mesh and the Adam Mesh Trading Group and Todd Horwitz, my name is John Hutchinson with Traders Reserve. Get yourselves in on this program, the Options Money Machine. We're very pleased to have had Adam along. Thank you, Tom, for your time, Adam, and for a tremendous presentation today.
Thanks, John, for having us. It's always fun, and we appreciate you, and we appreciate your audience. And Todd, you're the man. Thanks for being here.
Thanks, everybody. Catch Fox today at 4 Eastern.
Thank you, folks. Have a great day. The chat box will be open for about 5 minutes here as I wrap up the recording on the webinar, and then we will be shutting down the call. So if it's sort of last call, if you have a question or need to get in touch with Adam and his team, and I'll make sure that that gets circled back to everybody. But again, look forward to having you join their program, and I hope you have a profitable day.